Important Market Voice, Chakri Lokpriya, Managing Director, TCG Asset Management, joins us on the show. Chakri, good morning. Thanks so much for joining in.
Morning.
Uncertainty and volatility ahead of the budget, or would you believe because the budget largely could be a non-event, look at the crude price fall and be slightly optimistic about the near term?
Yes, I think we go through this hoopla every single year, and this year is no exception. And I think against the back, because we already had a corporate tax cut, which is kind of showing up in numbers in earnings results where they're having the benefit of the corporate tax cut. So now the government doesn't have too much headroom. You know, now the people are talking about LTCG or dividend distribution tax, but I don't think there's so much headroom. Yeah, LTCG might make it a difference because it never earned any revenue for the government in any case. Now, if you look at auto sector, real estate, and some of the agri-related sectors, these have been big contributors to the economy over the years. And those have kind of gone down dramatically in the last 3, 4, 5 years. So auto industry, we all know the pain. So if they do some kind of, I think there is an expectation of a GST cut, maybe they have tough.
But that would be a part of the GST Council, right? Or
that'll be part of the, so I don't know why they're talking about it in the budget thing. And about real estate. So I think, and personal tax cuts. So I think at the margin, if as long as there are no new taxes for luxury goods where the multiplier effect is very high, so those will be helpful rather than anything negative.
Agreed. Yeah, but I'm just wondering, so since we don't know what the budget will throw up, should you look at the other factors, which is one, that the earnings and the consumer earnings and consumer financial earnings are looking okay, and crude prices having fallen should also at the margin aid the macro?
Indeed, and if you look at this quarter earnings, and if you look at companies across board, their raw material costs have come down because commodity costs, and not just commodity, non-commodity raw material costs have also come down, which is showing up in the margins for these consumer companies. Now, on one hand, you have banking, which is a reflection of the macro's problems. You have still high slippages, high NPA, MSME in problems, whereas individual companies have repaired their balance sheets, fixing themselves up. So at the aggregate, a bank reflects the combined problem. Individual companies is their own benefits of restructuring. So that is what will play out in the, I think, in the broader market in days to come. Will be there sufficient opportunity to pick individual companies rather than saying banking as a sector.
Okay. For the year, what's your assessment of what the EPS could be? EPS growth.
EPS for this year is going to be a very wild card, especially for the broader market. For the larger cap, still financials will account for majority of the growth within the Nifty, that is. And outside the Nifty, you have companies like metals and autos, which will have some amount of positive contribution this year, which were not there in the last year. So taking all that into account, I think it should be roughly in the range of about 18%, 15 to 18%. The broader market can actually see a higher number than that because they were far more depressed last year. So as long as there is no new negative news, I think we will see a cyclical recovery going into FY22, not FY21.
Okay. What is the big risk that could derail this mood that we have right now? I mean, while we are seeing days of correction, the overall structure still seems to be that of investing on every dip. Do you feel that it can get significantly derailed if the budget is a big disappointment, or if there's something that comes about in the US which could dampen equity market sentiments, global equity market sentiments, and therefore the amplified effect here?
Yeah, US thankfully is doing phenomenally well, including the latest numbers of unemployment and the Fed deciding to keep on hold. Now India is now a recovery story because we know all the negatives that have happened. There's increasingly, I think, a recognition in various quarters in the government that they want to do something about it. So things like, this year you have an RBI tax one-off thing which helped. Next year it'll probably be the AGR which will bail out the government. But if you're bailing out the government, you're going to bring down two big companies, and the chain effect of the telecom loans and the banking sector is going to be thing. So I think those are the negatives, where individual policy actions like importing import duties on various components. Mind you, so India assembles a lot of stuff, electronic goods, pharmaceuticals, and then manufactures and sells it out.
Right.
So by imposing an import duty, you actually are cutting down growth, because the multiplier effect on services industry is far higher. So I think those are the kind of policy mistakes, if avoided, will help in aid revenue growth and EPS growth.
What about the contract manufacturers? You know, stocks like Dixon, Amber, which up until now have been reaping benefits of the fact that I think last announcement was the opening up of foreign investment into contract manufacturing as a space.
Yeah, you know, all these companies, they still import a very big chunk of their various components in assembling, in putting together an AC, in putting together various electronic items. Now, things like corona virus, every once in a while, come and derail that process for a quarter or two. Now, if they go ahead of the curve and say start imposing duties, which has been the talk, that is actually detrimental at the margin, because there is no alternative of domestic as a source. That manufacturing will happen over time. And so for that, I think there needs to be sufficient breathing space for the services. These are all semi-services companies. They're not true manufacturing companies, to actually breathe in over the course of this year for them to deliver the earnings.
You know, the other bit, Chakri, is this whole thing around consumption. Almost everything, if either has had a good revenue effect, a good margin effect, or at times the volume growth numbers have looked very strong. I want to drill it down to a micro pocket. The same store sales growth led names. Jubilant FoodWorks is up about 3.5%, strong showing. Westlife had a good number. We have a Burger King IPO coming up as well. Tata Coffee and the Starbucks franchise is starting to do seemingly well. Is this a large enough pocket for an institutional investor like you to bet on, or would you just avoid it?
I think this space is a very interesting, important space, and an expanding space at that. All these companies, Tata Global, Jubilant Foods, Westlife, none of them are represented in the Nifty, whereas they all reflect changing consumer tastes. And these companies are growing and growing very fast now, and lots of company-specific actions. Jubilant expanding into other countries, so they can do a Jubilant 2 in those new countries. Tata Global is going to get a bunch of brands, like nearly a couple of $1 billion worth of brands from Tata Chemical into Tata Global. So Westlife, you know, Burger King, a good company, good. I think the IPO should do well, depending, of course, on the pricing. So I think these are important sectors. I mean, consumer is a very big sector, the biggest sector in the US, growing one in India, and I think definitely important to invest in.
Okay, my last question, Chakri. You have a very keen eye on what financials do. Would you bet on, I'm not asking you to list specific names, but I'm using them as an example, an IDFC First Bank, etc., which have issues but are available at good valuations, or an HDFC Bank and Bajaj Finance, which have no issues but are at premium valuations?
I still stick with the Bajaj Finance of the world, for the simple reason that at about 5.5 times book, it still has one of the lowest cost of funds, which other NBFCs don't. So net, that eats and shows up in the margin, and therefore the multiples. So yes, on the other hand, but in the case of banks, there's far more in other companies other than the HDFC's banks at the margin, you know, beginning to, like a Federal Bank. These are still not out of the woods, but I would look at the broader market as far as banks are concerned.
Okay. Chakri Lokpriya, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you.